Pre-construction condos in Toronto are blowing up. For most of the year in 2024, everyone's already kind of been like poo-pooing on the pre-construction space, but now being $15 billion underwater really kind of puts things into perspective. This number is catastrophic. It's going to get worse before it gets better. Like, it's so bad right now that pre-construction investors can't even sell their units without losing their entire deposit plus some more. So if you thought that 2024 was already bad, just wait until 2025 when everything that's already been boiling over continues to boil over and blow up some more. Most of the highly overpriced units sold in 2021 and 2022 at the peak of the market are supposed to be coming for completion in 2025. And guess what? Developers were selling those units at prices that were staggeringly 30% above market at that time. Remember those crazy $1,600 per square foot in pre-construction downtown Toronto? Yeah, that's not happening anymore. And anyone who bought into those prices are really feeling the pinch right now. Hi, my name is Zen. If you're enjoying the data-driven and number-crunching real estate updates, be sure to like and subscribe. Look, the reason this video came to be is that I was going through the data for my end of the year analysis for the condo space, and it just kept like bothering me how I was increasingly, as I look at the data, getting more and more concerned about how the pre-construction condo market may spill into the resale condo space. And I was just like, yeesh. And in my usual ADHD fashion, it led me down a rabbit hole of trying to figure out just how bad and how much underwater pre-construction condos we as a market may be dealing with. And this isn't intended to be like a doom and gloom video, but the data shows it's pretty bad. So let me show you how I arrived at $15 billion of underwater pre-construction. And you let me know in the comment section below if you are as concerned as I am. So when you look here, the data set I took is from Urbanation, who have a very reputable name for data. And I took the number of pre-construction condos sold and the average price per square foot from the years 2020 all the way to 2023. And you can see in this chart over here. And I would say the average unit size for the entire building is around 650 square feet for most tall buildings for investors, which is, again, an educated assumption. Then I took the average GTA new-ish resale prices, which I would say is like $1,000 for a comparable unit that was completed in the last 3 years or so. And you can see the note here that condos.ca has the average selling price in Toronto right now as $860 price per square foot, which includes the older product. So $1,000 isn't too far off for a newer product. And I just simply take that, the total volume of each year and how much they are underwater relative to the current average. And you can basically see over here that the average in 2021 and 2022 were sold 25% above what resale is right now. And 2023 is 28% above resale. So when you tally all of that volume up for how much it's underwater, that's how I arrive at a smidgen over $15 billion. Hey, it's me interrupting myself. Ready to make a move? Just one free call, no hassle, put decades of experience to work for you. Here's the biggest problem. If you thought the pre-construction condo market was bad in 2024, wait for 2025. This is because the 2021 and 2022 purchases that are 25% underwater are coming up for completion in 2025. The severity of how bad the 2024 pre-construction market was really for condos that were purchased in 2020 and before, which by this chart again is 6% underwater on average. We're going into where we're going to be 4 times underwater of what is average that's closing in 2025. So this is why I have huge concerns. And when you get into the 20% underwater territory, we start having distressed sellers either selling for complete loss of their deposit plus more, or they're just walking away from their purchases from the builder. This is because if you have 20% deposit of the original purchase price and your property is 25% underwater, when you close, you lose another 5% on the appraisal, assuming that the banks don't backstop this, which they may. And this is all before taxes and development charges. This is why you have assignments that look like this, where people are selling at a complete loss in hopes of not being obligated to the contract anymore. And on top of that, I've had calls where a lot of the pre-construction buyers were considering walking away from their deposits and just waiting for the builders to sue them. It's bad. Like, it's really bad. So like, even if we get interest rate cuts and the condo market picks up, this isn't gonna save the pre-construction condo buyers from, being 25% underwater. And even if prices go up 5% in the condo space in like 2025, which by the way, I don't think they will, more on that later this year, you're still 20% underwater. And for the people who are trying to prey on these distressed sellers, you have to understand the math. It just doesn't math. Anybody who's trying to prey on these distressed sellers wants to get a deal. The seller has to sell for, say, 30% off, which means that the seller is actually paying the buyer 10% of the purchase price to get it off their hands. And most sellers rather just wait for the builders to sue them. That's the fact. And this is the problem and why a lot of these contracts are so illiquid. It's basically frozen. And I really think it's going to be quite catastrophic for those people that isn't publicly talked about in 2025. Now, how is this going to affect the resale market? I think it will affect the resale market if a lot of these pre-construction sellers sell it for less than what the resale market is and they pay the buyers to take it off their hands. You may think that sounds weird, but I have come across that a few times already, and where it actually makes sense to buy the pre-construction instead of the resale. But the upcoming closings become more and more underwater as more and more time passes because they overpaid for them. And the sellers aren't likely to want to, be out of pocket more money, and they rather just wait for litigation. So these pre-construction condos become more and more illiquid as the time passes. And maybe fortunately, it doesn't spill into the resale market because people don't want to lose money right away. It's just very unfortunate for the pre-construction buyers, and some of them are really just caught in, crappy situations. Now, here's the tough love for those holding on to pre-construction properties that are closing in the near future. You just gotta accept the situation for what it is and deal with it, because hope isn't a strategy. Because for your pre-construction purchase to not be underwater, you need the resale market for condos to move up a lot in price. But it's hard to when you have a great financial crisis level of unsold condo inventory in the market right now. And this is exactly what I talk about in this video. And despite more rate cuts and the sentiment improving, when you have this level of unsold inventory, it's hard for prices to go up, let alone go up the prices you need it to, which means that the pre-construction condo prices aren't worth anywhere near what they were bought for. So I'll talk to you more in this video. Your move, your future.